Remember when everyone said Solana was finished? They called it dead after that big crash, but fast forward to today and I just witnessed something that made me do a double take. The same Solana that was left for dead is suddenly getting the red carpet treatment from Wall Street. Seriously, when I saw a Solana ETF get approved, putting it up there with Bitcoin and Ethereum, I knew I had to share this story because something huge is happening here and it's bigger than anyone realized. Let me take you back a bit. Around late 2022, Solana was in free fall. One of the biggest crypto exchanges, FTX, went bankrupt and it dragged Solana down with it. Why? FTX's sister firm held a ton of SOL tokens, so when FTX blew up, people dumped SOL like it was radioactive. Overnight, the price plummeted. I remember friends literally asking me, "Is Solana dead?" Honestly, I wondered the same. The network had also suffered outages, like actually going offline for hours because it couldn't handle the traffic at times. Not a great look for something calling itself an Ethereum killer. I was this close to writing it off completely. But then, quietly, things started to change. While the world was busy mocking Solana, its developers kept building. They didn't quit. By 2023, Solana was stabilizing, updates were coming in to fix those bugs that cause crashes. A whole new validator client called Firedancer was in the works, geek speak for making the network more reliable and even faster. And get this, Helium, the project that powers those crypto Wi-Fi hotspots, actually migrated their entire network onto Solana. They chose Solana for one reason: it's fast and it works for their millions of little IoT devices. That was a sign. If Helium trusted it for serious infrastructure, maybe Solana wasn't a joke after all. Then came the moment that really stunned me. Visa, yes, the credit card giant, announced it's using Solana to move money with stablecoins. I had to blink twice. Visa doing settlements on Solana, that's like a seal of approval for speed. I mean, Visa doesn't play around. Their standards are sky high, and Solana's delivering transactions for fractions of a penny in seconds. It's as if the tortoise, slow traditional finance, quietly decided to hop on the hare's back. Our speedy Solana. By now, I'm rethinking everything I thought I knew. The chain that everyone joked about for being offline was now boasting some serious uptime and real-world use. The community was still there too. NFTs were booming on Solana. Some of the biggest NFT collections outside Ethereum live on Solana, and developers were launching all kinds of apps. Solana even launched a crypto-focused smartphone at one point, pushing the envelope of innovation. It was like Solana refused to die and instead started to thrive under the radar. And then came the plot twist nobody saw coming. The US SEC, the same folks who once labeled SOL an unregistered security, quietly gave a green light to a Solana investment fund. Basically, a Solana ETF began trading on the New York Stock Exchange in late 2025. That put Solana in an exclusive club with only Bitcoin and Ether. Imagine a couple years ago, regulators were like, this thing might be illegal, and now it's legit enough for Wall Street to package it into a fund for everyday investors. Talk about a turnaround. When I saw headlines about big institutions piling into Solana because of the new ETF, I was floored. It hit me that Solana's story needed a second look. And that's what I'm here doing, giving you and myself that second look as an honest first-person journey from skepticism to, well, something quite different. Before I go any further, I need to be absolutely clear about one thing. This might shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Alright, now that we've got that critical disclaimer out of the way, let's dig into Solana itself. What is Solana really, and why did it become such a big deal? Solana is a blockchain platform, basically a giant decentralized computer network, and its whole claim to fame is speed. We're talking fast. The network was dreamt up by a guy named 𝗕𝗘𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 for cell phones. So Anatoly had this crazy idea back in 2017. What if a blockchain could operate as quickly as the internet itself? In 2018, he and 𝗕𝗔𝗥𝗘 founded Solana, and by 2020, they launched the Solana network to the public. They even named it Solana after a small beach town in California. Not sure if it was to evoke some sunny optimism, but it fits because the project really did shine brightly, then maybe got a bit sunburnt later on, but I digress. The important part is Solana introduced a novel technology called proof of history. Sounds fancy, right? In simple terms, it's like giving every node in the network a synchronized watch that ticks super fast. Instead of each transaction waiting in line like at the bank, Solana's network can timestamp them instantly and slot them in without missing a beat. Combine that with a proof-of-stake system where validators, the computers running the network, stake SOL tokens to secure it, and you get a blockchain that has proven it can handle thousands of transactions per second, potentially up to 50,000 or more in bursts. For context, Ethereum back in the day managed maybe 15 transactions per second on its base layer, a bit more now with upgrades, but still nowhere near Solana's ballpark. Solana's goal was to be the web scale blockchain, basically, handle volumes like Twitter or NASDAQ, but on chain. The results: transactions on Solana cost like 25 cents. That's a fraction of a penny. It's so cheap and quick that for a while, people joked you could spam the network with millions of transactions and barely spend $1, which, unfortunately, some jokers actually tried, causing those outages. More on that in a second, but think about user experience. Using Solana is like sending an email click and it's there, whereas early Ethereum was more like mailing a letter and paying for certified mail. Solana's speed and low fees made it a hit for certain users. Remember the NFT craze? Solana became a hotbed for NFTs in 2021 because minting an NFT on Ethereum could cost $50 in fees, but on Solana it was basically free. That drew in a ton of users and developers. For a while, Solana was absolutely on fire in a good way. However, like I said, that fire got too hot at times and the network infrastructure couldn't always cope. Picture a brand new highway built for speed if everyone drives on it at once at top speed. Sometimes there's a nasty pile-up. Solana had a few pile-ups. In September 2021, so many transactions hit the chain, many of them spam from bots, that the network got confused and actually halted for 17 hours. Ouch. There were more outages in 2022. One time, a bug. Another time, some misconfigured node. It became a bit of a meme. Oh, Solana's down again. You can imagine how that shook confidence, because no matter how fast you are, if you randomly go offline, people get nervous, especially if you're handling money. This was part of why I lost some faith back then. I thought, sure, it's cool tech, but if they can't keep the lights on, what's the point? And combined with the FTX collapse dumping billions of SOL, it just looked grim. But here's the twist. Solana learned from those setbacks. The dev team doubled down on improving the code. They even brought in outside help. 𝗕𝗘𝗪𝗏, a big trading firm, stepped in to help build that alternate validator software I mentioned, 𝗕𝗙𝗪𝗏, to ensure there's redundancy and better performance. It's like having two separate engine teams for a rocket, so if one fails, the other can keep things running. Since late 2022 and into 2023, the network's stability improved a lot. Outages became rarer, and by 2024, I realized I hadn't heard about a Solana outage in quite a while. For a blockchain that was mocked as the Microsoft Windows of crypto, or because of the crashes, that was a big deal. Meanwhile, the world kept moving. Solana's ecosystem kept growing. We saw some seriously cool stuff. One example, a Solana phone called the Saga. Yes, they made an Android phone with built-in crypto wallet features, showing how committed they are to merging blockchain with everyday tech. And major projects were building on Solana, not just Helium as I mentioned, but also decentralized finance platforms, games, you name it. If you hopped into our community Discord, by the way, we have a free educational Discord server link in the description, come say hi, you'd see that interest in Solana never completely went away, even when the price was in the gutter. There were always diehards tinkering, discussing, staking, and believing in the tech. Now about the SOL token itself, the one you and I might buy or hold, let's cover a few essentials. Solana's native coin is called SOL, and you need it to do anything on the network, pay fees, run programs, etc. When Solana launched, it had an initial supply of 500 million SOL. Not all of that hit the market on day one. A lot was vested for founders, investors, the community pool, etc. SOL isn't a fixed supply coin like Bitcoin, it's inflationary, but don't freak out at the word inflation, it's a controlled schedule. Initially, inflation was about 8% per year, and every year that rate drops by 15% until it levels out at about 1.5% annually. That means today the inflation rate is already much lower than 8%. By 2025, it's somewhere around 5% or less and still dropping each year. New SOL tokens are released as rewards to those who stake their coins and help secure the network. Basically, it's paying the validators and delegators who keep Solana running. Now, here's a neat part. Solana actually burns a portion of fees. About 50% of every transaction fee is burned, i.e., permanently removed from circulation. With fees being tiny, that burn isn't huge right now, but if network usage exploded, more burning could counteract inflation. So you have an interesting tokenomic mix, some inflation to reward network guardians, some deflationary pressure as usage goes up. In theory, if Solana becomes as widely used as, say, Visa's network, that burn could start eating a lot of SOL, which could be good for holders. As of now, the circulating supply is around 445 million SOL, give or take, out of maybe 580 million total created. There's no hard cap, but the supply growth slows down a lot over time. What about distribution and decentralization? It's no secret that Solana had some big backers. Early on, venture capital firms and insiders got a significant chunk of tokens. That drew criticism. People said it wasn't as fair launch as Bitcoin or as community-driven as some others. It's true, a good amount of SOL was in the hands of early investors. But over time, as those tokens vested and were sold or distributed, the ownership has spread out more. By necessity, to run a validator node on Solana, you need a serious machine. High CPU, tons of RAM, fast internet. That means the number of validators is smaller than, say, Ethereum, where you can run a node on a laptop. Well, Sort of. Solana has around 1,300 plus active validators securing the network at last count. That's actually quite a lot. It's more than many other proof of stake chains, but each validator often controls more tokens on average because folks delegate to the big, reliable ones. So, decentralization is an ongoing debate. Solana is decentralized in that no single entity controls it, but it's also true that it's more concentrated than something like Bitcoin or Ethereum in terms of who runs the nodes. To me, as someone deeply involved in blockchain infrastructure, I'm actually part of a project called Unity Nodes where we run professional validators across various networks. I see Solana's validator community as crucial. These people invest in expensive hardware to keep the chain running at warp speed. Not everyone can spin up a Solana node in their garage. It's a far cry from just mining Bitcoin on a home PC. That's a trade-off Solana chose for performance. Services like our Unity nodes and others help by running validators so that you don't have to, but you can still participate by staking your SOL with us or other validators. In fact, a huge chunk of SOL, roughly 2/3 of all circulating SOL, is currently staked. Think about that. Over 65% of the supply is not sitting on exchanges ready to be sold. It's locked up, earning rewards and securing the network. That tells you many holders believe in Solana long term, or at least want those staking rewards. It also means the liquid supply, the amount actually trading freely, is a lot smaller than the total supply. This is one reason some folks speculate that if demand suddenly spikes, like if an ETF causes big fund inflows, or if millions of new users want SO, there could be a bit of a supply squeeze. I'm not saying Solana will disappear from exchanges overnight, but simple math. If 60 to 70% is staked and some more is held by long-term true believers or institutions, there's not a ton floating around. We could see volatility if new buyers flood in and can't find enough sellers. Now, let's talk strategy, specifically my strategy when dealing with crypto exchanges and buying tokens like SOL. One lesson we've all learned in crypto is exchanges can fail or freeze or get hacked. FTX taught that brutally. So nowadays, I never keep all my eggs in one basket. In fact, I sign up, complete KYC, and test out as many reputable exchanges as I can call it plan A, B, C, and beyond. If exchange A has an issue, I can quickly move on to B without panicking. I highly recommend having multiple options ready. You don't want to be scrambling when one exchange suddenly pauses withdrawals. On that note, all of my preferred exchanges, the ones I personally use and trust, are conveniently listed on my website, link in the description. Those are affiliate links, by the way, which means if you use them to sign up, it supports the channel at no extra cost to you. You get the same sign up deals and I get a small commission, which helps me continue making these videos. So if you're considering buying SOL or any crypto and you find my content helpful, using those links is a win-win. But regardless of where you buy, please have a backup plan and don't leave large amounts of your coins sitting on an exchange long term. Once you've bought your SOL, the next question is how do you store it safely? Let's cover that because security is paramount. We discuss this endlessly on the Discord too. The good news is Solana has some great wallet options. The most popular is Phantom, which is a user-friendly wallet that works as a browser extension and a mobile app. It's kind of the MetaMask of Solana, if you will, super easy to use. You can store your SOL and any Solana-based tokens or NFTs there. I've used Phantom and it's pretty slick, but for even more security, I tie my Phantom wallet to a hardware wallet like a Ledger. Ledger devices support Solana. You use it via the Phantom interface or Ledger's own app. With a hardware wallet, Your private keys are stored offline on the device, meaning even if your computer is compromised, a hacker can't steal your soul without physically having your ledger and knowing your PIN. So if you're holding significant Solana, I highly recommend that setup. Another option, the Solid wallet, more developer-oriented, or Solflare, but Phantom has really become the go-to for most people due to its ease. Storing safely also means safeguarding your seed phrase. The 24-word recovery phrase for your wallet is literally the keys to the kingdom. Never give it out, never store it in plain text on a cloud service, and never type it into any website. I know this sounds basic, but remember that Solana had a scary hack in August 2022, where about 9,000 wallets were drained. It turned out a third-party mobile wallet, 𝗕𝗘𝗪𝗧, had somehow leaked users' private keys. Not Solana's fault per se, but it was a harsh reminder. Only use trusted wallets and, if possible, hardware devices. If something sounds fishy, like a site asking for your seed phrase, it is fishy. If you want to get involved beyond just holding SOL, you've got a few options. Staking, you can delegate your SOL in wallets like Phantom and earn around 7% APY. It helps secure the network, and the main thing to note is the 2 to 3 day unstaking period. Building, Solana smart contracts use Rust, often with Anchor. It's tougher than Solidity, but powerful, and the developer community is growing. Solana has even teamed up with Unity to make game integration easier. Using dApps, you can dive into Solana's DeFi platforms, NFT marketplaces, and other apps. Fast confirmations and low fees make it easy to experiment. Running a validator, this takes serious hardware and know-how, so it's not for most people. Still, if you have the resources, it's a direct way to support the network. Otherwise, staking with established validators is a perfectly good way to contribute. Let's weigh the benefits and risks of investing in Solana, because you know I've got to play devil's advocate even though I'm clearly excited about its recent turn of fortunes. On the plus side, Solana has a huge upside potential. It's already a top 10 crypto by market cap. Actually top 5 or 6 recently. If it truly becomes a backbone for things like payment networks, Visa, social media, there are decentralized Twitter-like apps on Solana, or gaming, the demand for SOL tokens could skyrocket. Solana has positioned itself as a go-to chain for high-performance needs, kind of like the sports car of crypto networks. And now that it's gaining legitimacy, ETF approval, big partnerships, more large investors might feel comfortable entering the arena. We could see big funds buying SOL as part of diversified crypto holdings, especially if they think it's the next Ethereum, or at least essential in a multi-chain future. Another benefit, user experience. This often gets overlooked, but if crypto is ever going to hit mass adoption, it has to be easy and fast. Solana delivers on that front arguably better than any other major chain right now. It can handle surges of activity without breaking a sweat these days. The more positive press and real utility Solana gets, the more its reputation rebuilds from the FTX disaster. And a strong community remains. Solana folks are passionate. Trust me, I've talked to a lot of them in our Discord and elsewhere. They really believe in this tech. Now, the risks, and there are definitely risks. First, technical risk. While outages are less frequent now, they could happen again. Any software can have bugs, and Solana's complex. If a major outage occurred at a critical moment, say when a big partner like Visa is relying on it, that could severely damage trust. The Solana team is mitigating this with that second client and other upgrades, but one can't say it will never go down. It's something to monitor. Second, centralization worries. If too much stake ends up with a small group of validators or early investors, they could influence the network or the market, and regulators have already taken swings at Solana. In 2023, the SEC called SOL an unregistered security in a lawsuit, leading a major app to delist it for a bit before bringing it back. Later, the ETF approval showed the opposite trend: more institutional acceptance. It's a mixed picture, and if regulators ever crack down on projects with big VC allocations or ICO routes, Solana could feel it. Investors should keep an eye on the legal landscape. Third, competition. Solana isn't alone. Ethereum still dominates, supported by fast-growing layer 2s like Arbitrum and Optimism, other layer 1s Cardano, Avalanche, Polkadot, and plenty of newer chains are also fighting for developers and users. Solana has to keep improving its performance and make its ecosystem appealing enough that builders choose it over the alternatives. If another chain delivers similar speed with a better overall experience, Solana's edge could fade. Another risk is sheer volatility. Solana's price has been all over the place, roughly $1 in early 2021, up to $260 that same year, down to about $8 in 2022, and back above $200 by late 2025. It's a roller coaster. Sol could run to $500 or $1,000 if the market explodes, but it could just as easily drop to $50 or even $20 in a harsh downturn. If you invest, make sure the amount is small enough that you're okay even if things swing hard in the wrong direction. One last point on security. Beyond outages, several Solana-based projects have been hacked, including cases where attackers manipulated DeFi prices to drain funds. Any crypto ecosystem carries risk, and Solana's still young compared to Ethereum, so some apps aren't fully battle-tested. If you're farming yields or buying new tokens on Solana, do your homework and don't put too much into experimental projects. So where do I land after all this? I've gone from skeptic to cautious believer. The technical progress and growing support from major players are hard to ignore. Solana's rebound from its boom-bust-boom cycle is pretty remarkable. I'm not saying it's guaranteed to keep rising, but I am watching closely. I hold some airSol, I stake it, and I use the network. If you want to learn more, hop into the Discord linked below. Big picture, Solana's story is part of the larger push for faster, more usable crypto systems. It has pushed boundaries, stumbled, and kept moving. Whether it becomes a backbone for payments or social apps, or hits more bumps ahead, it's already changed expectations for what a high-performance chain can look like. So if you ask me now, is Solana dead? Not at all. It might be entering its most interesting chapter yet. If you enjoyed this breakdown and want more crypto insights, hit subscribe. Thanks for watching, and I'll see you in the next one.